Good evening and welcome. You are with Henry de Klerk from Ultima Financial Planners on this week's edition of Kingdom Wealth through Financial Planning, your weekly program on Impact Radio where we aim to equip and to inspire our listeners to make better financial decisions based on biblical principles. This evening, we are going to be talking about generosity as well as how to maximize from a tax perspective the available benefits in saving as well as in giving. The Bible speaks a lot about how we can handle resources. Proverbs 21 verse 5 says, "The plans of the diligent lead surely to abundance." Today, I want to help you plan diligently for two very practical areas where faith and your finances meet. Firstly, it's giving, donations to tax-exempt public benefit organizations. We're going to talk about that. And then also saving for retirement, the benefits of contributing towards a retirement annuity or pension fund or provident fund close to year end. We call that a top-up. So we're going to ask a simple question. What are the tax benefits and how can you use them wisely to honor God with your money? And the two specific questions that I aim to answer this evening is there any tax benefit when I give to charity? And how exactly does my retirement contribution help me with tax? So grab a pen and paper. Tonight might just be an opportunity to change the way you think about giving and saving. God's heart for generosity. Last year with the Flow Conference, our theme was generosity, and we explored and assessed and analyzed generosity from all different angles. And as believers, we don't give because of tax. We give because God first gave to us. 2 Corinthians 9 verse 7 reminds us God loves a cheerful giver. So the primary reason for generosity is obedience, compassion, and love. But here's the beautiful part. In South Africa, our tax system actually rewards generosity when we give in the right way. So what is a PBO and Section 18A? Let's unpack some of the technical terms in simple language. In South Africa, certain charities and organizations are registered with SARS as public benefit organizations or PBOs. Some of these are also approved to issue what is called a Section 18A certificate. So you can apply for tax exemption with SARS if you're a PBO, and that will then allow you to issue a Section 18A certificate. So here's what it means to you. If you're given to an approved organization that has Section 18A status, and you give a Section 8, and they give you a Section 18A tax certificate, often called a Section 18A receipt, you can claim that donation as a tax deduction in your tax return. Not all charities qualify, only those approved by SARS for specific public benefit activities such as certain welfare, education, health, and for similar purposes. So step one is important. Make sure the organization is approved, a SARS approved Section 18A PBO, and that they issue valid Section 18A receipts. How much can I deduct? Now let's talk about the numbers in simple terms. SARS allows you to deduct donations to approved Section 18A PBOs up to 10% of your taxable income for the year. Very simple. Let's take an example. Let's say your taxable income for the year is 300,000. SARS allows you to deduct up to 10%. So that is 30,000 Rand is the amount that you can donate, and you'll get the full deduction. So if you donate 10,000 to approved PBO with proper Section 18A certificates, you can deduct that 10,000 Rand from your taxable income. Your tax is then calculated on 290,000 instead of 300,000. If you give more than 10%, the good news is that the extra amount doesn't disappear. Okay, that extra amount is still available. It can usually be carried forward to the next tax year or claim them subject to that same limit. So what is our key takeaway this evening on this subject is when you give to the right kind of organization and keep your Section 18A receipts, you're not only blessing others, you're also potentially reducing your tax bill. So let me give a few practical steps when that you can start taking. So one, and this is your checklist, important one, is check the status of the charity or the PBO. Okay, ask them directly, are you a Section 18A approved PBO? And make sure they can issue a proper Section 18A tax certificate. Keep your receipts as number 2. So file those Section 18A certificates safely. You'll need them when you or your tax practitioner does your return. Then plan your giving. Instead of giving randomly, decide on an amount or percentage of your income you want to give each month or each year. And remember, up to 10% of your taxable income may qualify for a deduction. Lastly, don't just give for tax. The tax benefit is a bonus, not the main reason. Our heart motive is still, Lord, everything I have is yours. So where should I sow? And this discussion, excuse me, becomes relevant end of the year, end of the tax year, in this time of year, when we are doing our second provisional and we're thinking about the tax year. Because remember, you have to make that donation within the tax year to get the benefit for that year. So tax years in South Africa ends end of February, okay, for the individual. It means that if you want to now, when you do your tax return in July, want to claim for that, you're going to have to make that donation before the end of February, which is now effectively in this time. So maybe my recommendation from a tax perspective always would be is do a short tax calculation. Maybe sit with your tax practitioner if you're not doing it yourself and do a calculation to see what your tax exposure is, if you're going to need to pay in tax once tax season for employees starts in July. And then it might also help you to decide also how to go about this and making extra donations. Or just after the break, we will talk about retirement annuities. So questions, FAQs, let's just look at that quickly. So how does Section 18A benefit work for businesses? The same way, you can donate up to 10% of your taxable income, and that will be deducted from your taxable income before tax is calculated at 27% for most companies. Okay, so it works the same limit applies for companies. At Ultima, for instance, we utilize a lot of that because we do intentionally give to entities that spreads the kingdom, but also makes a difference in our communities with education, etc. And we make use of that 10% that we can actually contribute. So the next question, frequently asked question is what happens with an individual that pays you in? Pay as you earn is deducted on a monthly basis. You do a once-off donation before the end of the tax year. Then, as I said earlier, you can actually claim that against the tax that you've already paid, and you should receive some money back from SARS. This is usually equivalent to the amount that you've given times your tax rate. That is the amount that you should save, because this is now a deduction against taxable income. Lastly, what about pensioners? For pensioners, the same applies. You can still donate or give, and you will get that back then from SARS? So all those questions very relevant this evening, and I hope this is an answer to some of the questions that you've had. You're welcome to contact us with further questions if you have in this space. I know a lot of charities and a lot of companies, and PBOs, non-profit companies or NGOs are seeking funding this time of year because I know there are tax benefits, and we should, by right, if we can, support them. We're going to take a short break. When we get back, we will continue this discussion. Good evening and welcome. You are with Henry de Klerk from Ultima Financial Planners on this week's edition of Kingdom Wealth through Financial Planning. We started just before the break with ways. The two questions I wanted to ask this evening is how and what is the effect of me giving to a PBO that has tax exemption status. And then after the break now, we're going to be talking about retirement annuities, pension and provident fund top-ups, and also look at the benefit as well as why we would recommend that as really a good thing to consider for tax planning, but also for saving for your long-term goals and objectives, especially for your retirement plan. So if generosity is about how we give today, then saving for retirement is about how we prepare for tomorrow. Proverbs 13 verse 22 says, a good man leaves an inheritance to his children's children. We honor God not only by giving, but also by planning so that we are not unnecessarily a financial burden on others later in life. That's where retirement annuities, pension funds, and provident funds come in. And the tax system gives us very strong incentives to use them. So how does the tax deduction work? Let's talk about that. In South Africa, we know that whether you contribute to a pension fund, provident fund, or a retirement annuity in your personal capacity, I always at this stage say that the retirement annuity is a concept that was brought forward from way back when pension funds were much more the norm. Times have changed. These days, your retirement annuity is your personal pension fund, basically, because most companies do not offer pension funds anymore. So you are on your own. You are saving in your retirement annuity. And interesting enough, the legislation works in such a way that these three funds, pension, provident, and retirement annuities, works exactly the same way. Well, 90% the same. Provident fund has one difference, but mostly exactly the same way from a tax perspective and also from your options, etc. And therefore, your retirement annuity is your personal pension that you have to focus on. So SARS will allow you to deduct your total retirement fund contributions within certain limits. So the general rule is you can deduct up to 27.5% of the greater of your taxable income or your remuneration. And all of that is capped at 350,000 per year. So let's unpack that with a simple example. Suppose you earn 400,000 per year. 27.5% of that is 110,000. As long as your total contributions to retirement funds are 110,000 or less, they can generally be deducted in that year. If your income is very high, the rand limit of 350,000 per year becomes the maximum deduction, even if 27.5% would have been more. Many listeners may say, but my employer already contributes to a pension or provident fund. How does that affect me? These employer contributions are treated as a taxable fringe benefit in your hands, but, and this is important, for deduction purpose, SARS treats the total contribution, both employer and employee, as if you paid it. So when you look at 27.5% and the 350,000 limit, we are looking at the combination of employee and employer contribution. So practically that means that if your employer is already contributing a bit, you and your advisor need to check how much additional RA or fund contribution still fits within your tax efficiency limit. Why is this such a powerful benefit? Let me explain why this is so powerful for your financial plan. Firstly, immediate tax relief. When you contribute to your retirement fund, your taxable income goes down, which means you pay less tax now. Long-term growth, the money that is invested for you inside the retirement fund can grow over time. And over decades, that means quite a lot. Time in the market, we've continuously and often said in this program, is so valuable. So because these are rules about how and when you can access these funds, it creates discipline, which many of us need when it comes to money. Alignment with stewardship. From a Christian point of view, using these tools wisely is part of being a good steward. Planning for the day you're no longer earning a salary while still being able to give and be generous in every season. So your retirement fund contributions are not just money disappearing on your payslip. They are one of the most tax efficient ways to build a future where you can live in retirement and also continue to give over the long term. So it's important to note that that you can now do your tax calculation. Now, just before the break, I said it's prudent to maybe do a short and a high-level tax calculation to see more or less if you are going to have to pay in or you're going to receive back. If you, for instance, let's use an example, need to pay in 10,000 Rand, okay, and your tax rate is 30%. Okay, so that means that if you're going to have to pay in your own source 10,000 Rand for this tax year, then before the end of February, you will need to add 33,353 Rand into your RA or your pension fund, and that will completely wipe the tax on that you needed to pay. So it's a way of avoiding it's not avoiding as such, but it is a way of reducing and limiting your tax through legal, valid ways, and you are actually saving in your own pocket. So you can save in your own pocket 30,000 Rand, and you don't have to pay SARS 10,000 Rand, and you get the future benefits on that 30,000 Rand. Whilst if you pay the 10,000, you're out of pocket on the 10,000, and that's just gone. It doesn't mean anything to you in the future. That is just an example. You can also pay in 10,000 Rand, and it's going to reduce your tax liability to 7,000 Rand, which means at the end of the day, it costs you 17,000 Rand, but you have saved 10,000 Rand in your own pocket. Okay. So it's important for us to understand these benefits this time of year. A lot of people talk about top-ups and how it's important to maximize on what tax benefits and advantages there are. So I encourage our listeners, even this evening, to make sure that we do understand these provisions. So this evening, we've spoken about the Section 18A benefit that can be obtained through giving to public benefit organizations that is registered with SARS, registered at the tax exemption unit, and you can deduct that of your taxable income, meaning you will save tax, but you will also make a difference, and you will also then exercise the generosity principle, as we've spoken about extensively also last year. And then secondly, you can save in your retirement annuity, your pension or provident fund. You can add an amount, and based and capped at the limits, as I mentioned earlier, you will get a very generous and a handsome tax benefit. So we encourage our listeners to use these benefits, to be aware of them, and to make a difference in our community, but also to be good stewards of your own money and to save also for your long-term goals and objectives. Thank you for joining me this evening. It has been a pleasure to share with you these two concepts and two ways of maximizing your financial plan. And all that's left for me to say is God bless and happy planning.